This week, have over a decade of HECM reforms helped? A closer look at policy changes and their impacts.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Have 4 principal limit factor reductions, a financial assessment, first-year distribution limits, and a collateral risk assessment with the potential of a second appraisal requirement help to improve the soundness of the home equity conversion mortgage program. That's our topic today. And recounting these changes, it's clear to see the speed at which the HECM has been tinkered with, modified, and in some cases, transformed from the loan we once knew. The question is, did it work? A recent column by Chris Clow in Housing Wire's Reverse Mortgage Daily summarizes the findings of a study that was commissioned by HUD's Office of Policy Development and Research in 2022. The study was then completed in November of 2023, and we've included a link to that study and its findings in our video notes. Now, the study sought to measure the effectiveness of policy changes from 2000 to 2020 and the outcomes for borrowers, the program's financial health, and policies. Reverse Mortgage Daily summary notes the growth of the HECM program as endorsements surged from a modest 6,600 plus units in fiscal year 2000 to a high of 114,000 plus endorsements in the fiscal year 2009. While FHA's study does note the appreciable impact of the housing crash in the suppression of endorsement volumes, it does not mention the market disruption and the subsequent reduction of HECM originations in the wake of major bank exits that included Wells Fargo and Bank of America, which decimated our largest distribution channel for HECMs. Did the HECM insurance claims and operating costs exceed the insurance premiums that were collected from 2000 to 2020? The report notes this: for the 533,894 HECM loans that originated and terminated during the 20-year period, the estimate shows that FHA incurred a net loss of approximately $10.4 billion or $19,000 plus per HECM loan. The bulk of losses came from loans that originated between 2006 and 10, says the study, during the height of the housing market bubble and then the depth of the housing crash. However, it's difficult to determine those specific losses between 2006 and 9 since HECM insurance premiums and claims were in the General Insurance and Special Risk Insurance Fund until 2009. That's when the program was moved to FHA's Mutual Mortgage Insurance Fund. However, one event may have contributed to HECM insurance claims in the years following the housing crash, and that is Mortgagee Letter 2008-08, which was issued on March 28, 2008. The Mortgagee Letter clarified HUD's position on offering fixed-rate HECMs, which could be either open or closed-end loans. In 2008, the fixed-rate full-draw standard HECM accounted for only 20% of HECM endorsements. That, according to the Consumer Financial Protection Bureau, or the CFPB's report to Congress in June of 2012. The report notes by 2010, as home values continued to fall nationwide, 70% of all HECM originations were the standard fixed-rate full-draw. The higher available gross loan proceeds and the generous premiums on the back end of the loan made the HECM standard the popular choice for lenders and for borrowers that were seeking the security of a fixed-rate loan. The CFPB noted that the average expected rate was 5.1% in the fiscal year 2011. The growing cohort of fixed-rate full-draw HECMs dramatically accelerated the HECM loan balances as home values suffered their largest losses in a generation. It wasn't until 2013 that the standard HECM fixed-rate full-draw loan was removed as part of the 2013 Reverse Mortgage Stabilization Act. The timing of the introduction of the standard fixed-rate full-draw HECM seemed odd, considering that home values began to soften or fall when the first waves of the subprime mortgage crisis began to push home values down in late 2006. It should also be noted that before a series of principal limit factor reductions in 2009, 10, 13, and 2017, younger borrowers could get as much as 65% of their home's appraised value, with the oldest borrowers getting PLFs as high as 95%. Did the PLF reductions have their desired effect? The report noted the first and second PLF reductions in 2009 and 10 reduced net losses and reduced unscheduled draws. Next, the 2013 PLF reduction had little impact on consumer demand or losses, according to the study. However, the 2017 PLF reduction reduced net losses without impacting loan demand, according to the study. The enactment of the financial assessment, which measures a HECM applicant's willingness and their financial capacity to pay their ongoing property taxes and insurance to avoid a technical default, that likely did reduce program losses. However, the study was unable to determine the actual net benefit or dollar amount saved. How much did the second appraisal, when required as part of the HECM's collateral risk assessment, reduce claims? The study found that the policy was estimated to have been associated with reducing net losses by $991 per loan, a marginal improvement at best. However, in the introduction of the HECM program analysis, the report is very clear on this point. Of the loans that were originated in 2013 and after and that have been terminated, 95% of those loans on average have resulted in a net financial gain for FHA. On its face, this would validate the effectiveness of the Reverse Mortgage Stabilization Act of 2013. The HECM program analysis, while enlightening in some points, leaves many questions to be answered. So, what are your thoughts on the effectiveness of HUD's changes to the home equity conversion mortgage and over the last decade? You can chime in with your thoughts in the comment section below. Also, please share this video on LinkedIn. We thank those of you that do that each week. We have a YouTube channel. Be sure to subscribe and hit the notification bell. That way you never miss our latest content. And we bring you the latest reverse mortgage related news each and every week on HECM World Weekly. You can find us on Spotify, Apple Music, and on Podbean. And we do have a video edition, which you can also watch as well. Thank you for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World.